Yo, what is good? So in this video, I'm going to basically be breaking down the week. Future videos, I'm starting to kind of show my surroundings and show my face more. Now that I have my office finally set up and everything, we are going to be going over what I'm going to be focusing on this week. I'm not going to focus on too much because it's for some countries a pretty light week for the economic calendar. Obviously, as you know, the war in Iran is still going on, and it has even intensified, especially this past week, with Iran saying that they are getting ready to take the offensive instead of being defensive and defend themselves. They're going to start to attack people by themselves on their own accord, which is obviously an escalation in the war. And we're getting ready to give them economic sanctions in order to basically make them collapse as a nation. That's his attempt instead of doing the whole bombing thing in that regard. So I'll be focused on a few pairs, especially overnight tonight between Sunday, because it's Sunday where I'm at. It's probably a different time where you're at if you're in a different country or a different state, different time zone in general. So it's Sunday where I'm at, and the market hasn't opened yet. Sorry about the echo. Um, and we focusing on gold and oil because they're two really easy pairs to trade right now in reference to fundamentals and everything that they are going and the ways that they're going. So last week, my bad, oil was supported by obviously the conflict in the Middle East, Strait of Hormuz being closed. It's the same story, nothing new. And we have gold being supported last week by safe haven demand. We did catch a nice 1 to 2 on gold, as well as we tried to go for a 1 to 4, but there just wasn't enough time in the week. But I was content with really any outcome, 1, 2, 3%. You know what I mean? It's all very, very nice profit, right? Adds to your profit for the month. This week's going to be the same. It's going to be a little bit more precise, less losses this week, more kind of locked in. Last week I was kind of started off a little rough because of how back and forth the investors were with their money and how the markets were moving back and forth based on this and based on that. And typically I can keep up with that, but that was kind of one of those volatile weeks where the market was just flying back and forth as fast as it can in reference to safe haven demand and high proxy beta currencies like the Australian dollar and things like that. Basically, the sentiment kept flipping back and forth real hard because no one knew where to put their money. Different things kept happening. And when those weeks do come up for me, it tend to be a struggle, but I am getting better at kind of gauging those and being able to kind of get the actual picture that's going on, take good trades and recover any losses I might have if I was thrown off track by that. So we have gold being supported by safe haven demand last week, as well as the Treasury Treasury Secretary Bissett doing that. Can't remember what it was, but it affected gold and supported gold and dropped the dollar. I'll have to go back and look at that real quick. Can't remember what it was called. Actually, I can just look in the Discord real quick. 2 seconds. I think it was trade fundamentals. That's something I'm putting together. So we have the Treasury market intervention. The gold rally was heavily accelerated by the U.S. Treasury unexpected announcement that will double its buyback of long-term bonds, right? So this is something that I'm learning myself as I go. I'm reading about and everything. And everything that you don't know, you can just read about in the bank reports. Honestly, anything that happens that's unfamiliar to you in your trading and you don't know how it affects things, I would not make a move on it until you really learn what that thing is actually, and then how that affects the assets that you're trying to trade. Once you do have that knowledge, then you are good to go and have the green light to take the trade. Start to take trades based off of that, especially for something that's going to be affecting assets that you trade, right? So the gold rally was heavily accelerated by the U.S. Treasury's unexpected announcement that it would double its buyback of long-term bonds. That drops the dollar because it drops the dollar, and because we influence the bonds, I had already covered this, that yields go down. And they were buying bonds at the time and it drops the dollar because yield went down. Plus, all of the economic news from last week, the last 2 weeks really has been overall negative, and the markets have not really looked over that. The FOMC minutes was a non-event because the markets were looking at the last several weeks of very dovish data when it comes to the Fed and their policy moving forward, right? We do have a couple of things this week that are going to be very key to watch for this coming week. We have New Zealand dollar retail sales, which is very, always a good thing to note. If you don't know what retail sales are or how they affect monetary policy or what they measure and what they mean, we could just look it up real quick. Let's just go to Google Finance. And this is a good way to get some knowledge measure just for you guys to be able to retail sales measure the total receipts or dollar value of goods sold by retail stores over a specific period, typically months. It tracks consumer spending on finished durables and non-durables, such as food, clothing, electronic vehicles, and gasoline. Because consumer spending drives roughly 70% of the U.S. economy, U.S. retail sales serve as a critical economic indicator for tracking consumer confidence, inflationary trends, and overall economic health, right? So they're specifically referencing the U.S., but it's the same thing, and they measure the same thing for other countries as well. So you can see why the Fed will look at all these smaller data points as well to be able to, in other countries as well, looking at these smaller data points as well to see how inflation and other things like that, how the economy is doing and things like that, so they can get a good big gauge on that. 7 p.m. today, which I will be paying attention to, Eastern time, so it'll be 6 p.m. my time. Right now it's 2:38 p.m., so in about 4 hours or so. Treasury Secretary Bissett to give a press conference on Iranian economic sanctions. So he's announcing these sanctions that they're getting ready to do. This is going to affect the markets. This is going to affect the dollar. This is going to affect all of that. So you have to pay attention to that to make sure that you're on par with that. We do have gold potentially going down. Actually, I have it set up for a long, and I have all the markups for a long right now. But if it does end up going down from the higher oil prices, as they have been saying, then at that point we would sell. But we have to continue to read the markets and read the bank reports and read the session reports in order to make sure that we are on par with what's actually going on with this pair right now. Oil is going to be long for quite some time. Honestly, it's been long for a long time. Let's pull up U.S. oil, because the same things last week will usually will bleed into the next week, right? But there are some times where other things will affect that pair and kind of overtake that pair in reference to, is this mic even on? It is. In reference to fundamentally, right? 1 week it might be safe haven demand for gold and the bond buyback program that he did and things like that, and said they would even do further, dropping the dollar and lifting gold, supporting gold. But then next week it might be because oil prices are rising high, which and the war still going on, which caused high inflation expectations globally, right? Which drop gold, right? Higher oil prices, lower gold prices. This is how in the past several months, we have been able to buy gold, or my bad, sell gold and buy oil kind of simultaneously because of the correlation there. So I will be focusing on oil longs for sure, because the situation with the Strait of Hormuz is not going anywhere, obviously, as we've seen, and I'll be focusing on gold long. I will also be looking very interested to see this case about Euro USD shorts. There are different banks with different conflicting opinions on that, right? We also have some kind of insight from MUFG from one of the latest bank reports. This is from the 21st, or 2 days ago. Oil heads for strong weekly gains as U.S. intensifies pressures on Iran. Oil headed with Brent nearing $94 a barrel, WTI below $87 a barrel, as our U.S. prepares sweeping measures are aimed at further isolating Iran's economy. The U.S. is expected to detail the package next week, which is what we just looked at, potentially targeting not only Iran, but countries and institutions that continue to doing business with that land, Iran, raising particular uncertainty around China, the largest buyer of Iranian crude oil, right? The measures come alongside the U.S. naval blockade of Iranian imports, which Iran's central bank governors have virtually halted the country's oil exports. Tensions over the Strait of Hormuz remain elevated, but the U.S. and Iran continue to dispute over the control of the waterway. Further vessel attacks reported this week. Supply pressures are being compounded by Ukrainian strikes on Russian refineries and ports, contributing to severe tightness in global diesel markets and record refining margins, right? So they're telling you the things that are affecting it, and this is as of the 21st. Nothing's changed. I haven't really looked at if there's been any more ship strikes over the weekend and things like that. We'll be looking at that as well. So that obviously plays a part in it if they keep mentioning it. Gold has for third weekly gain on debt concerns. Gold is on track for a third consecutive weekly gain, trading around 4,530 an ounce, supported by concerns over rising government debt, borrowing costs, The U.S. Treasury expect unexpected expansion of long-dated debt buybacks initially pushed Treasury yields and the dollar lower, boosting gold. While Treasury Secretary Scott Bessent signaled that further buybacks, a new fiscal initiative could follow. Gold has now gained 11% in August, also benefiting from renewed safe haven demand and dip buying after its earlier war-driven sell-off. However, the rebound in oil prices poses a headwind by keeping U.S. inflation risk elevated and preserving the possibility of further Fed rate hikes. The war going on, global inflation, right? Going forward, U.S. Treasury yields and fiscal policy, the Fed's rate outlook, and energy-driven inflation stemming from the U.S. Iran will be key drivers. So they're telling you, you hear all the fundamental channels right here that are going to be affecting gold. Pay attention to them, right? And the rest is really irrelevant. It has to do with the Egyptian inflation and Moody's credit rating. I like to read about the things that are like relevant to what I'm doing and not anything else. If it's not relevant to what I'm doing, then I do not read it. I don't trade anything having to do with Egypt or Morocco. None of this is relevant to me. And that's the end of the article right there, right? So just showing you a couple of things that are affecting gold, and I will be paying attention to all of them very intensely this week to make sure that we're on par for getting our trades. I'm going to try to go for another week where we win 100% of our trades. I'm looking to basically go for a couple of trades this week, maybe scaling for one more entry on one or two of them, being kind of aggressive. But oil and gold are going to be my primaries. I do like the idea of NZD USD and Euro USD especially, because everyone has conflicting opinions about where Euro USD will go in terms of bank research. Some people say it'll drop to 112 here soon. And some people are saying it's going to continue to go up because of the dollar is dropping. I think that the global inflation, as long as the war is going on, we're going to have sticky inflation overall. You know, we've had this recent data, and we are going to end up having to hike rates, right? We have, I think, one more inflation report. It's coming out a month before the Fed meeting, the Fed policy decision. That's really going to be the big one that's going to determine a lot of things. So make sure you're paying attention to that. This week for the United States as well, pretty light week overall on the calendar for the US. I know there's not a lot of stuff happening, you know, stuff like this happening, as well as this speech, as I said. And other than that, we have like the European consumer confidence, GDP for certain countries in Europe, and, you know, ADP employment change every weekly. We have that every week. Other than that, it's RBA minutes, things like that. Other than that, we got GDP coming up this week as well on Wednesday, and that's going to be pretty huge. That's going to be pretty huge. We have the Australia's inflation. Why do you keep doing that? We have Australia. That's why I'm pressing this button. Australia's inflation coming up. Yeah, it's going to be pretty huge. Obviously, I'll be focusing very heavily on the Australian dollar this week. Just due to that, we have Tokyo inflation as well. The core CPI as well for the Tokyo coming up. I'll be paying attention to that. Looking at GJ shorts honestly this week because we had some dovish data for the UK last week. And then you had the inflation data for Japan last week that ended up being sticky, as sticky as it's been in years. And then we have that obviously they had already been talking about hiking, things like that. All of that's going to lift the yen pretty much at market open. So I'm looking at GJ shorts as a positive opportunity. And then wherever Euro USD does end up going, I would be looking at that. And I would wait for some data to come out. Obviously, we have a good amount of data here coming out this week for the euro, and we have some decently important data for the United States. Overall, compared to everybody else, we have a pretty light week, right? That's it. So I plan on closing since the last week of the month. I always go super hard the last like 2 weeks of the month. And I plan to close. I mean, if I play my cards right, I can get into one for like goal for like a 1 to 3, right? Scale it in for one more, another 1 to 3. That's 6% right there, one pair. And then all we really need is one more pair really at that point, because yeah, I mean, we just need one more pair with a similar setup, you know, a 1 to 3 and a 1 to 3. And if we can get those two, we're done for the week. There's no need to close anymore. I would have hit my income goal for the week and my percent close goal for the week, and I would have closed 6%. Not going to try to get too greedy. Maybe at best 7%, 8% if there's an opportunity for it. We've already closed a good amount of profit. We're only working with the profit that we already have. I do plan on closing 1 to 3% depending on the setups and if they occur from a technical point of view, because they're there from a fundamental point of view, especially oil. Fundamentals have been set up for that for weeks. I plan to close 7% on that overnight into New York tomorrow morning, and going from there. So I'll be focusing on gold and oil this week really heavily, and then I wanted to look at an Australian dollar based pair because of the stuff that's coming out this week. and a euro-based pair, mainly Euro USD. If it does end up going up continuously from where it's at, we'll just go long on Euro USD and keep that one at a 1 to 2. And that'll pretty much conclude our week, unless there was something that's crazy that happens that sticks out that I would like to that I see happening and I can't pass up the trade. I would probably just leave the week alone at that point and call it a week, even if it's like Wednesday or Thursday. A lot of people feel compelled to trade all week in every event and every piece of data. No, you can trade to Wednesday, Thursday, and call it a week if you're close enough profit and basically just observe the data coming out for context for next week. That's a good thing to do because you're taking a step back from actually physically taking trades. You're relaxed and you are just taking in the data, interpreting the data and reading the reports at that point. And you have basically a relaxed week from that point on. If you have any more questions, then let me know. We might have sentiment flipping, safe haven demand for the dollar. If it does occur, sometimes it does, sometimes it doesn't. It really just depends on how investors feel. If they feel like they are unsafe and unsure, they will move to the dollar and gold. But it could end up like last week where gold is the safe haven and the dollar's down because of some data that came out that pointed to being dovish. This is the 1 to 3, or my bad. This is the 1 to 2. 1 to 2 that I'm looking at oil right here. We did have, from a technical point of view, price going up from the daily imbalances here and continuing up all this time. We still have this extremely high right here. There's a box of liquidity that has not been swept. Yet there is a displacement down here into this daily imbalance. It came up, kept taking the highs. We had a high right here and a low right here. It swept that, swept the high displacement. I do expect them to come back down and hit this area right here with this daily imbalances. I like to focus on the higher time frame POIs because that's really what's going to be valid. It might come down to this order block right here, this area at most, but I do plan on dipping my stop losses behind here, and then we will hedge this as well. But I don't see oil going down for any reason anytime soon, unless randomly sometime this week they just call for a peace and start actually talking negotiations. At that point, I would hedge oil short and basically get ready for another escalation. So every short oil that you see, this is a temporary short, and you take advantage of a temporary trend. I would keep those at a 1 to 1 because as you've seen through the patterns, inevitably things will escalate again. If you have any questions about this video, let me know, and we'll go from there. See you in the next one.